Hello everyone. In my last video, I have shown that if the yield curve inverted, there is a high chance for the US to enter recession and the stock market would crash. I also prepared an animated video to show how the yield curve behaves with stock market at the different phases. So, since we know that most of the time, inverted yield curve indicates that the probability for the market to tank is high. Should we sell our stock now? Although overall stock is an anticipation of future, but we can always refer to the history pattern to help us plan for our investment or trading strategy. It will also be instructive for investors to note that historically there has been a time lag between yield curve inversion and onset of recessions. The time lag between yield curve inversion and recessions range from at least a few months to a few years. We call this long lead and lag times. Let us check this table. Since 1978, across 7 tightening cycles, the S&P 500 peaks anywhere from 3 months to 12 months after a yield curve inversion of 10 years to 2 years yields. On average, the S&P 500 peaks 12 months after the curve inversion with on average a 11% return. The returns vary between -4% in 1980 and plus 27%. Therefore, on average, there is an upside in equities after inversion. Thus, never rely on any news or headline to make a decision. What I will or not do during the lag period? I need to emphasize my disclaimer here. I am a long-term investor. Thus, the stock that I'm holding are planning for 5 or even 10 years. I have done thorough research on my stocks. Thus, I have confidence on them and do not mind to hold. I also have the holding power as all my money used in investment are not my daily or urgent fund. I already allocate an urgent fund that is enough for our family up to 9 months. I will continue to short stocks. As mentioned previously, I am a long-term investor, and since I know that historically the stock will still go out after the yield curve inverted, I will still buy the stocks that dips to the attractive price. However, if the market has gone out and reached resistance level or previous all-time high, I will stop buying. Don't panic sell. I will panic sell whenever I read some headlines. Panic sell is the fastest and easiest way to lose money in stock market. Use all my funds. This is more for money management rule. Even though there is a high probability that the market will rally higher during the lag time after the yield curve inverted, but I will still keep a healthy cash ratio of 10 to 20% on hand to prepare for the worst. Next, what shall we do when the recession hit us? Shall we sell all the stocks 6 months later? My answer is no. Keep investing without timing the market is the best way to compound our asset. The opportunity cost that we miss when the market rallies, in fact, could cost more than the market dips. The longer we invest, the lower the risk of losing money. Inverted yield curve and its implication notwithstanding, investors should stick to their financial goals and invest accordingly to their financial plans. Downturns do not last for very long. Unwarranted risk aversion may lead to suboptimal returns and compromising long-term financial interests of investors. Of course, if you are not comfortable to ride the volatility or the market tanks and do not want to see our portfolio just going red, there are a few things we can do to protect our portfolio during the recession period. We can always sell part of the shares when it reaches previous swing high or new high. This could help us to keep part of the profit in our pocket and lower down our average price. If the market still rallies, we still have stocks to enjoy the profit. Just take note that we never know when the market will tank. If you sell your shares but the stock still rallies, follow your plan. Do not FOMO, regret or buy them back at high. This will make us very uncomfortable or disrupt our psychology when the stock starts tanks. Second, hedge our portfolio with put option or VIX option. This is a big topic and I'm still learning it. Probably, I can prepare a video to talk about this. However, hedging requires strong discipline and new investors are not recommended to do so, as a wrong move could accelerate the loss or reduce our profits significantly. Third, asset allocation is the most important attribution factor in success of our financial goals. While we should ideally review our asset allocation in a systemic manner at regular intervals, prolonged period of volatility and or deep correction is the time when we should take a look at our asset allocation and rebalance if required. Next, let us see what are the stocks that are potentially going out during the recession. During the last COVID-19 crash, we could see that Dow Jones minus 33.81% from the high, XPX minus 33.6% from the high, Nasdaq Composite Index minus 29.5% from the high. During the same period, TLT, the bond ETF, plus 15.16%. The following stocks are quite stable during the crash. Costco, minus 11.34%. Walmart, minus 4.47%. Dollar Tree, minus 16.98%. Consumers tend to spend carefully during recessions. Many people begin buying lower price items. They also typically eliminate optional expenses, such as paying professionals to take care of routine home and car maintenance. Instead, they usually spend more money at dollar store, home improvement outlets, discount retailers, and auto parts stores. Next, let us move forward to the earlier recession, the Great Recession, which caused the subprime mortgage crisis market crash. During this period, Dow Jones, XPS, and Nasdaq Composite Index suffered a market crash of minus 49%, minus 47%, and minus 50% respectively. How about TLT? It was out 20.42%. How about the retail stocks? Walmart was out 17.7% at the same period, while Dollar Tree out 4.37%. However, this time, Costco did not perform well, as it also crashed 28.5%. On the other hand, Johnson & Johnson and Procter & Gamble, which are also known as defensive stocks, down around 15%. Lastly, let us look for one more recession, early year 2000 recession. During this period, markets suffered from the dot-com bubble crash. During this period, Dow Jones suffered a 13% drop. XPS suffered a minus 31% soar-off. Nasdaq Composite Index, which holding most of the dot-com companies, crashed 71%. During the same period, TLT up 3.09%, Walmart up 10.06%, Dollar Tree up 13.58%. Costco did not perform well. It suffered a minus 27.7% drop. This is the summary table for the index and the selected stocks performed during the last three recessions. From the table, it clearly shows that TLT, Walmart, and Dollar Tree are the potential good stocks to buy during the recessions. Please note that I'm not giving any stock tip and recommendation. This is purely based on my research, and the past behavior does not guarantee the future performance. However, I feel that the time to buy them are not there yet based on the technical analysis. Remember to subscribe my channel so you could get my update if I start to purchase these stocks. Nonetheless, if we are a long-term investor, if we are patient enough, the index is always going out. No matter what recession or crash in the past, every point was the best buying point compared to today's price. Let me end my video with Warren Buffett quote: "The stock market is a device for transferring money from the impatient to the patient." Please subscribe my channel and like my video to motivate me to prepare more quality videos. Thank you and see you in the next video.